you really want a big bank to partner and do distribution for like gigantic tech organizations, Goldman Sachs seem to have it like absolutely nailed. So how do you use one of the biggest balance sheets on the planet to like really change how actual financial services works? Well, they're just going about it on a tear.
First up, Goldman Sachs in talks with Amazon about small business loans. This is a story from the FT. And what we're hearing is that the investment bank will reportedly be able to offer loans via Amazon's SME lending platform as early as March. Last week, Goldman CEO David Solomon told shareholders he would move into new areas such as consumer banking and wealth management. Goldman also recently announced it would seek additional banking-as-a-service partnerships in 2020. Both Goldman and Amazon declined to comment on the talks. So as our producer said, let's have a conversation about a potential conversation. What do you make of this? Isn't it like attempt 788,000 on Amazon's side to move into this space?
I mean, they've done lending in various different geographies for quite a while, haven't they? In sort of one guise or another. I mean, I actually don't think the Amazon bit is the interesting bit. It's the Goldman Sachs bit. Like, these guys are just on an absolute tear, right? You know, since, Marcus was created and the platform was there, and then Apple Card and now Amazon, it's like, if you really... we talk about the banking battlefield a lot, but like if you really want a big bank to partner and do distribution for like gigantic tech organizations, Goldman Sachs seem to have it like absolutely nailed. So how do you use one of the biggest balance sheets on the planet to like really change how actual financial services works? Well, they're just going about it on a tear.
It's like they're putting the fin in TechFin, which has been touted for a long time. Because, if we look at big tech, they've got serious issues with sort of antitrust and tax avoidance coming up. So they sort of bang into a wall with the regulators sometimes. So actually, Goldman's positioning themselves as this kind of banking as a service. We're going to work with, it seems like they're going to try and work with all of the FANG stocks. That's super, super interesting. And I think we'll see more of these kind of partnerships from Goldman's going forward.
And they are, as David says, on a tear. But I like to repeat myself. It's my brand thing. And one of the things I find amazing about Goldman, we've talked about this before in previous podcasts, is that they boldly go forth and they do things that are differentiating and get them the headline inches. But they're not cutting into their core business. They're not in any way disrupting themselves. This is not a space they've historically played in. They're not in any way jeopardizing existing revenues. We have consumer ventures currently account for less than 3% of Goldman's revenue, while card and consumer loan balances account for less than 1% of its $993 billion in total assets. I did not know that off by heart, by the way. This was written in front of me. I'm not that smart.
She's so smart.
I know, she knows things. But she does know this thing, that they have been consistently good at playing in other people's backyards. And I must admit, I find that amazing.
Yeah, it's interesting, exactly like you say. It's like, while most people are on a defensive strategy, like these guys are like, whose business cases can we spoil in other areas, right?
And if you're going to do anything, you kind of got to have three things in place. You need to have the innovation coming down from the top, which Goldman's clearly do. You've got to have a sort of operational system where there are no roadblocks in the way of that innovation. And then the third and kind of the most practical piece to actually executing is being able to hire the right sort of tech and product talent. I remember like one of the first people that I met in the fintech scene about a year ago when I was starting to build BIP. It was a former tech leader, ClearScore, and he'd just taken a job with Goldman's in R&D. And at the time I was thinking, well, that's kind of strange. But now I look back on that and their ability to hire the best talent in engineering and product, I think, is allowing them to execute these super interesting things.
Speaking of which, on that, if you go back to episode 354 of Fintech Insider, we had Bo Hartman on. Bo was the guy who built out all of the Marcus platform that all of this stuff is actually sort of built on. So if you want to go gain some of those insights, go over to there, 354.
And he's quite an incredibly insightful and hilarious guy to boot. Lois, I'm going to pick on you to see if you pivot away from the question I ask. No, but I would like the sort of institutional perspective. Do you feel that this will matter? Do you think that this will ever be anything more than play at the fringes? We know that loan balances make up less than 1% of Goldman's assets. Will this ever be a big space for them?
Yeah, I mean, okay, fair enough. It's not a huge part of their business right now, but I think it's definitely a sound bet, right? They're really not missing about. They're partnering with Apple, they're partnering with Amazon. I kind of see it as them getting their foot in the door of this new space. And I think they're making really clear, deliberate moves to diversify their revenue streams for the future. So, like, for me, it makes perfect sense. And, okay, it's not core to their business, like you say, but I think that's in their favour at the moment.
I mean, it's not yet.
That's right, nothing to lose, right?
I mean, Apple Pay is only 1% of the revenue of Apple, but it doesn't mean they're not putting amazing people and amazing technology to go make it happen. It's, when you're number one, I mean, this is really where banks have got themselves into, right? Actually, if they don't continue to innovate and move stuff forward, then, the thing that you make all your profit for might be wiped out. So, spread bet would be good.
I think there's also the seeking uncorrelated type of revenues, right? Let's not forget Goldman is a very powerful trading house, right? And this is very uncorrelated type of returns if you get it right. So it makes a lot of sense from my mind.
It's not disrupting absolutely anything. But what about this banking as a service partnership announcement? How core do we think this might become and how transformative?
In my mind, and I may be controversial in this, right? Banking as a service is very linked to moving money, right? And Goldman is not a traditional commercial bank. It is not a correspondent bank. And as such, I think if there is to be more banking as a service, I think it's a lot more into the wealth tech and the trading aspect of it. I don't think it makes much sense for them to play in the role of international cross-border payments, which a lot of banking as a service is actually pushing into that space. So the opportunity to me is not the typical one that I would think about when I'm thinking of banking as a service.
I would agree with that, and I find myself on this podcast time and again sounded like a fangirl for Goldman, which I never thought would happen in my younger years. But the reality is they have, to your point, David, no reason to play in the shallow waters of a race to the bottom in terms of pricing. They're not a traditional commercial house. They're not a traditional retail house. So they don't have to do any of the hygiene stuff. Will we see something extremely creative that plays right into the fattier bit of this equation? I wouldn't think they would enter the race if they didn't intend to win it.
Yeah, I mean, it's interesting, though, to try and make money off something that you would have done anyway. That's sort of been... You've heard me say that a lot, Leda. It's like one of my mantras, right? So actually, I mean, if you look at BlackRock with what they've done with Aladdin, like they were creating that platform anyway. Therefore, they created it so good that it would be good for other people. I mean, it's the story about how AWS came about, right? So if by making the platform that Bo put in place with Goldman Sachs to support Marcus, that they can now monetize that in so many other ways and use that to release their balance sheet as well. It's just...
Why wouldn't you?
Yeah, why wouldn't you do that? Like if you can now make money from your competitors, well, they're making money as well, that you're making money. It's like, this seems like the perfect crime to me.
That's right. That's absolutely right. Well, watch this space. Interesting.